Good morning. Welcome to Bazaar Morning Call. Here's wishing all our viewers a very, very happy new year. Hope this year is filled with everything that you desire, primarily health, followed by, of course, wealth, happiness, joy, prosperity, and all of that. From the entire team of CNBC-TV18, wishing all our viewers a happy new year. But joining me now is Lata Venkatesh and Nigel D'Souza as we kickstart a brand new week, a brand new day, and, of course, a brand new year. Folks, Happy New Year to both of you, to your families, and hope this one is the best one yet.
Oh, absolutely. We had a good one as far as stock markets were concerned last month. I mean, better than others. Even if we did only 4%, others did so much worse. Let's hope this year's better.
Absolutely. And welcome back.
Yeah, Happy New Year to both of you. It's good to be back, and, I had a really good holiday. And, Lata, wishing all our viewers a very, very Happy New Year. May this one be a prosperous one as well. And, in the last 2 weeks or so, I've been talking to a lot of market participants as well. But a lot of them said, we're talking about that 4%, but portfolios are not feeling like that 4% and that 18,000 odd mark. Yeah. So I just hope that 2023 is a year when maybe, in fact, retail portfolios start looking good. That means the broader markets start outperforming. So we'll talk about that in the show as well.
Only hope COVID and climate don't scare us.
Hope the animal spirits come back this year, right? But they haven't. I mean, the SGX Nifty this morning is indicating that we'll have a muted start. In fact, Friday as well, although it was a day of shortened trading in the US, you had weak cues. And we wrapped the year up with one of the worst years that the US has had since way back in 2008. So hoping that this is a better year, at least for global markets. The S&P 500 was down 20%. The Nasdaq was down over 33% in the year gone by. The Dow got by with less than a 10% loss. But the Nifty has been largely ranged between that 17,800 to 18,200 level. So far, it's holding on to both the 100 and the 200-day moving average. Let's see how the week shapes up. A lot of cues to talk about that. We'll do that, of course, in a bit. Today, the US markets are closed and most global markets are closed later in the day, so we won't really get any major cues, but lots to watch out for otherwise this month.
Oh, absolutely. But first, what the market will take away from last week, we have not had a great set of global cues on Friday. 3 negative cues, Wall Street ended lower, crude was higher, we don't like that combo, and bond yields were higher. In the US, there was some very good Chicago PMI numbers. Before that, the jobs data was good. So, that means the Fed will not stop. So the market's a little worried. Indian cues, actually, we got a bunch of data. We always do on the last day of the month, and this was last day of the year. Core sector, that came in at a good 5.4, but that's entirely base effect. If you looked internally, 6 out of the 8 sectors did very badly. But those 2 that have done well have done superbly well. Coal has done exceptionally well, and cement is up 28% year on year, and even month on month, it's a decent improvement. So maybe you could look at it as mixed. Fiscal data, there's one surprising thing that actually caught my breath, which is that corporate taxes collected in November were lower than what we did last year. That's a little, maybe it's a one-off. Therefore, the gross tax revenues for the month were also lower than what we had collected same month last year. However, fiscal deficit was excellent. I mean, it is 60% of full year. I'm saying excellent because that means the economy, the government is spending and the economy will spur. The other number that came from RBI, which was the Q4 borrowing of the states, that came in. They have said that the states are going to borrow 3.4 lakh crore. I don't think the market is prepared for that much. The numbers I heard on the street were more like 2.9, less than 3 lakh crore. So I wonder if that may have a slight negative impact on interest rate market today. And finally, of course, the big negative news I thought was the FPI sell number coming in at 3,000 crores was a bit rattling. I mean, we've had 3-digit sell numbers. This 4-digit and 3,000 crore was a shock. But I think the GST numbers were great, and auto sales, you tell me.
So it was a mixed bag this time around. I'm sure the street will react to it as well. Passenger vehicles, the small car guys like Maruti have been suffering. It's almost now a double-digit loss that they've seen. Maruti sales were down 9%. The small car segment got hit very bad. But what I really liked is that there was good growth in medium and heavy commercial vehicles and electric vehicles. In fact, Tata Motors commentary stood out for me where they said that fleet utilizations have gone up. There's a pickup in road construction. There is an increase in cement consumption. And that has led to a good recovery in medium and heavy commercial vehicles. So I'll watch out for that pocket very closely. And of course, there are a whole host of other cues to watch out for as well today. But for now, for starters, looks like the market is going to start in the red. Nigel, Nigel, what are you tracking?
Well, we were talking about Santa Claus rally. Santa never came, right, in December. We made all-time highs at the start of December, but we didn't get that big rally that we were anticipating. So we ended a little bit lower. But as we stated earlier, will 2023 belong to the broader markets? The small cap index has got rattled, and that's after a bit of a pullback. So it ended last year with a cut of around 15%. That's why portfolios are feeling like we're at around 16,500, around 17,000, rather than 18,000 plus. So I'll be tracking that very closely for the remainder of this year. And I think odds could favor broader market outperformance for this year. So let's see how that goes. In terms of Friday's recap, well, I was on vacation, but I tracked a couple of hours of trade. And we witnessed a sharp downtick, particularly in the final hour. But volumes, well, they were a pittance of what we normally see. Volumes much lower, and I think that's likely to be the trend for the next 3 to around 4 trading sessions. So you get a broader trend maybe by, Friday or thereabouts. The FI data, well, it's looking a little bit bearish in the F&O market in particular. They added some short positions, that's close to around 12,000 short contracts, and they wrote calls aggressively as well, in the ratio of close to around 4:1. And the long-short positioning on the index itself is around 50% apiece. I'll tell you what, when you get some of these bearish cues coming in, it's actually a blessing in disguise, because there could be a big short covering bounce that could play out. What's the range you're looking at? Well, a 400-point range on the Nifty itself. So you just pull up a couple of those numbers out there. 17,850 to around 18,250. And the Nifty Bank as well. Basically, I'm working with the 2% range on both these two. And let's get further into that. On the Nifty levels, the 50 DMA, that becomes crucial on the upside. So maybe, in fact, we get a bit of a bounce as well. I'm expecting some supply at those levels. While on the downside, we went and breached that 100 DMA in the last week of December. So that becomes a crucial support zone. On the Nifty Bank as well, the 20 and the 50 DMA become very crucial. We're closer to around, the 20 DMA right now. So maybe if you can get past that mark, then it'll be good news. Otherwise, on the downside, you're at around 42,500 odd. That's going to be important. SGX Nifty suggests a bit of a pullback. I think at some point of time that gets bought into. But still, volumes will be thin, so you could expect some bit of volatility.
Oh, generally, in the first week of Jan, people are sort of getting back to the office. They're still relaxing. So I guess volumes will start picking up second week. You said Santa didn't arrive on Dalal Street, right? I mean, it was there all over.
Yeah, all
but
over.
he missed that turn, that the exit to Dalal Streat was missed on the highway.
I'm coming back from vacation. My kids are really small, so every day they ask me, has he come? where was he? So I'm scampering to put the gifts under the, under the tree.
Under the tree.
They've done the red coat and kept their faith
You should start
Santa.
doing that, next year onwards.
Yeah.
I am Papa's your Santa now, this year and every year, right?
Yes, yes, Santa. Okay.
But a couple of more things that I'm watching. There's also the US FOMC minutes that will be closely tracked this week. So do keep your eye out on that. Any indication of whether the Fed goes easy on rate hikes will be, sought out for after the FOMC minutes. And then we get full-fledged into earnings season. We start off with TCS on 9th of January, followed by all the IT numbers, HCL Tech, Info, Infi, Wipro, and then the big banks, HDFC Bank comes through on 14th, followed by ICICI Bank on 21st. So lots to watch out for. But before we start the show, let me tell you what's lined up in the first half hour of the show today. We'll get you updates from the markets across the globe. Arvin Sanger of Geosphere Capital Management will be with us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with Prakash Diwan as well. Okay, first up, on the equities front, we have a comment coming in from Aditya Suresh of Macquarie, who believes that it is far more likely that MSCI India sees a 10 to 15% correction rather than a 5% rally in 2023. He says India's earnings growth outperformance is more than priced in, macro momentum is waning, domestic flows are moderating, foreign flows remain soft, and we can use this pullback to add exposure to India, as the midterm outlook remains constructive. He says digitization, formalization, and the Make in India theme are a few mega trends. And he also talks about how their focus idea list includes HCL Tech, Indocin, Sun Pharma, GAIL, TVS Motor, and HDFC Bank that are an outperform. And Bajaj Finance, Reliance, Jubilant Foodworks, InfoEdge, and Concor are an underperform.
Okay. Well, a market is made of opposite views. So here's another one on the other side. Mahesh Nadurkar of Jefferies says India's economic outlook is robust, with FY24 GDP growth of 6%, driven by a housing upturn and improving corporate spending. He says domestic companies' earnings should grow around 15% for FY24 as input costs stabilize and the rate hike is now priced in. He says December 2023 Nifty target is 19,000. It offers only a limited upside due to valuation and potential corrections should be buying opportunities. Mahesh Nandurkar says they like banks, staples, property, industrials and select autos. Underweight on IT telecom.
Okay, let's also try and tell you how to approach the money markets today. B. Prasanna of ICICI Bank says that the dollar retreated during the last week of the year owing to hawkish ECB commentary and optimism regarding the reopening of the Chinese economy. He says the rupee remained in a very narrow range as oil companies bought matched quarter-end exporter selling flows. He adds, ahead of the US jobs data, the dollar is expected to remain supported and he expects the dollar-INR pair to trade in a range of 82.25 to 83 to the dollar.
Fair enough. And on bonds, B. Prasanna says global yields drifted higher amidst thin liquidity owing to continued risk of higher inflation from China opening up. Back home, he says yields were more stable as strong investor demand continues to provide key support, expects markets to remain range-bound with improving system liquidity, and he expects the 10-year benchmark bond yield to trade in a range of 7.2 to 7.4 in the near term.
Well, we have a lot of stock-specific action for you, and we'll get to that in just a bit. In our special Top 10 segment, we're looking at Tata Motors, NMDC, Coal India, Moil, Religare Enterprises, Torrent Palm, and Escorts Kubota. They are stocks on the back of positive news flow, while on the flip side, you have Maruti, Eicher Motors, MCX. They are stocks that could open up in the red.
All right, well, let's welcome our first guest of the day. Arvin Sanger, Managing Partner at Geosphere Capital, is joining us. Arvin, good morning. Happy New Year to you. First day of the new year, first working day, that is. And hope you have a great one. How are you feeling about global markets? I mean, nothing's going to change overnight, and the mood has been slightly bearish in the US markets. It's been one of the worst years since 2008. You think fortunes are going to turn?
Well, for us, it was our best year by a factor of 3 in our global portfolio from any prior year. So it was a great year for us because we had big bets in our global portfolio in energy and coal and a few select metals. I think 2023 I doubt it'll match the year that we had, but for global investors who are looking at or Indian investors are looking at what's coming, I would say the biggest theme for us in 2023 is going to be the reopening of China. China is having a tsunami, not a wave of COVID right now. The faster it goes through, the quicker it'll come out on the other side, whether that's in February or it's in March or it's at the end of the first quarter. That's going to mean a very bullish outlook for commodities on which China is dominant. And therefore, I would say that if I were to pick my theme for 2023, the commodity markets would be particularly attractive going into 23, particularly the metal side and maybe even energy, because we're going to see the mother of all revenge travels coming out of China after having been locked in and shut in and not able to travel globally, or people from global not able to travel into China for the last 2.5, 3 years. So I think there's a lot of interesting things to look at, and they're global in nature.
Arvind, if you staying in America outperformed last year, you're one hell of an alpha manager. You are the guy to listen to. First of all, of course, Happy New Year. Arvind, how would you look at India? If your broad theme is that commodities are going to be expensive, India as a whole and the micros in India, what would you like the metal? Would you like the Tata Steels and the Hindalcos?
Well, I would say, you have a few metal stocks. You have the Hindalcos, you have, you have a few other metals names. You have a few energy. Unfortunately, you can't play in India, but on the metal side, you can play, some of the trading beneficiaries, some of the metals companies. And Vedanta is there, and you have, you have a few steel companies. I would say that one of the biggest risks to India is going to be in the second half if metals and energy do get a benefit from China reopening. You could see some, reemergence of inflationary forces in the Indian economy, but we feel good about the overall outlook. The growth outlook is decent, but India is not immune to the fact that the U.S. could go into a recession in 2023. So we're going to be much more selective in how we look at the Indian market in 2023.
Hi, Arvind. Good morning. Arvind, India did well in 2022, But my broader question is, between developed markets and emerging markets, how would you position yourselves, given that the S&P was down close to 20% in the past year? But what's your take on that?
I think emerging markets could outperform in 23, and I think part of it is that Fed is trying to engineer a slowdown and a recession, and you could have the largest weight in emerging markets is China, and I think the Chinese government is going to be much more pro-business than it was in the last couple of years, trying to revive the economy. So that can help emerging markets, particularly China-dependent ones, but also countries like India, which are not that export-dependent. It's not independent. It could still have a decent year from an earnings growth. US, on the other hand, I think first half at least looks like the recession headwinds could be overhanging it. But it's in long year. We don't know when and if the Fed will pivot and how things might turn out in the US and developed markets in the second half of 23. But I've been cautious over the last several months about the US market broadly, and I'm not changing my view, and therefore the overhang for emerging markets short term is going to be US Fed actions, but I think that's largely run its course. Now it's a US recession risk versus emerging market growth opportunity. And I think China is going to lead the way out of the emerging market growth in 2023.
Okay, that's been a narrative actually for a while. In the last fortnight as well, we've had a lot of experts tell us that. But Arvin, leave us with some sectoral preferences, right? Because as we were just mentioning a while back, next Monday we kickstart earnings season with a bang, and you have all the IT numbers that will come through. IT has had one of the roughest years in 2022. Do you think this is a good time to be nibbling in at least after the 40% falls that the large cap IT stocks have seen?
I think it could get interesting here in the next couple of months, because I think the US recession risk and the financial industry hit that it's taking, and that's, the IT sector is dependent on that. That is largely discounted. So if I take a 1 or 2 year view, I won't take a 1 or 2 month view. But on a 1 or 2 year view, I think the IT companies are well positioned for the continued digitization and the opportunity for outsourcing. So yes, I would say that over the next couple of months, that would be an area. But an area that we are, underweight in India would be the commodity sectors. That would be our number one weight. IT could be another. Financials, we're getting a little more selective on. They've had a great run. We'd be a little more selective on those. And then, some of the areas like real estate, niche sectors, we see some good opportunities in some of those kind of companies. And we have some selective industrial companies that we like.
The last one is interesting. I was wondering, would you bet on the India capex cycle turning? We have seen commercial vehicles doing well. Usually it's a precursor to construction activities picking up, the L&Ts and the other capex companies?
Yes, I think that the capex companies are going to go into a multi-year growth cycle. Again, it won't be a straight line, but I think 23 should continue to give us positive indications on the capex cycle in India.
Okay. Arvin Sanger, it's always a pleasure speaking with you, and hope the year 2023 also sees you as an alpha fund manager beating the markets. Thank you very much for joining us.
Thank you.
Well, quick break, and then our promised list of top 10 stocks.
Team is standing by with CNBC-TV18 top stocks that you need to track today. So now you go first. You had a busy weekend because the auto sales numbers were trickling in. I
think it's the only one, tracking those numbers on the first. But actually, the summary, the 4 companies that came out with numbers, completely mixed bag. So let me start with Maruti. I'm going with red over there because the numbers are on the weaker side. It's a 9% fall that we've seen, and steep fall in the small car segment. So that's really dragged the overall performance. Total sales coming in at just 1.39 lakh units. Eicher Motors, I'm going with red because Royal Enfield sales were quite weak actually. They were below street estimates, and despite having some of the new launches like the Hunter do well. So not only are they seeing lower volumes, but now because the Hunter is a low margin product, they're sacrificing on margins as well. So I expect the stock to be in the red. However, the commercial vehicle piece is doing good. It's a 17% growth that we've seen over there. In fact, that's the big, positive takeaway from the numbers this time. Even Tata Motors has showcased good commercial vehicle sales. MHCV sales are up by 34.3% and total sales are up by about 10%. Passenger vehicle sales have also gone up, courtesy electric vehicles. So I'm going with green for Tata Motors. And finally, Escorts Kubota, going with green over there as well. Total tractor sales are up by almost 19% year on year. But importantly, the management commentary is very good. They say that rural sentiment remains favourable. There was good Kharif procurement, Rabi sowing and better water levels in reservoirs. So I'm going with green for Escorts, Kubota.
That's good to hear. Well, it looks like government is spending, so CVs are doing well. It's the personal consumption that's lagging. But Nigel, why are you watching NMDC and manganese, MOIL?
Yeah, so I'm watching three stocks, Lata, and I was a little bit busy, Sonia, as well on January 1st because, there was quite a bit of news flow that came out. Let's start off with NMDC first. I track the buyers. They get the request from NMDC, and the request was that they're going to go ahead and increase prices. It's not yet on the exchanges, but I reached out to the management. They haven't commented, though I'm sure that they have hiked prices on lumps as well as fines by around 500 rupees per ton. That's good news for an NMDC, right? A few factors that did play out. One is global iron ore prices. Well, they are up by close to around 15% in the last 1 month or so. The China reopening factor, obviously, that's playing out there. There have been price hikes by private miners in Odisha. So obviously that gives them fodder to go ahead and increase prices. And when pellet prices move up, that as well, gives them reason. So NMDC green on that one. Moving to MOIL, well, they have increased prices. We got a release late last evening that on, on content with manganese content of 44% and above, it's increased by around 15%. And below 44%, well, it's been increased by roughly around 7.5% also. Price increase coupled with that, also the production number for December is very, very good. So production as well as sales numbers that they have disclosed are very good. So green on MOIL as well. And finally, Coal India, well, they have come out with their operational update for the month of December. Production is looking good, double digits. And on a high base of last December, they have delivered a 3.5 to 4% growth. So all three stocks going with green on them.
Okay, thanks for that. Well, let's move on. Surbhi is with us. Surbhi, Happy New Year to you. You're looking at Religare and MCX this morning.
Hi, Happy New Year. So I'm looking at Religare because the lenders have approved one-time settlement of outstanding dues for Religare Finvest. Now, just to alert our viewers, Religare Finvest is the NBFC arm of the company. Now, Finvest owes close to 5,400 crores to 16 lenders, including the likes of SBI, Bank of Baroda and Punjab National Bank. The company has proposed 2,320 crores as a one-time settlement, which is close to 57% haircut to the outstanding dues. The management in its press release also says that RFL has been taking all the corrective measures advised by the RBI so that they can restart their lending business. I'm also looking at MCX, where the company has extended the contract for support services with 63 Moon Technologies for another 6 months, beginning Jan 1st. Now, this agreement with 63 is a stopgap agreement before they switch to TCS as their service provider. The agreement with TCS was supposed to help minimize their operational costs, and that has been delayed temporarily, so that can be viewed as negative. Back to you.
Okay, thanks for that. But positive perhaps for 63 Moons for just a bit. Okay, Vivek, why are you watching Torrent Power?
Good morning. Torrent Power in focus. Now, newspaper reports are indicating that the company is in talks to buy some renewable and clean power projects from Renew Energy Global. Now, what the company has done is, as per the newspaper report, is that they have submitted a non-binding offer for the solar and wind power assets. So the solar assets of close to 350 megawatts, or wind assets of close to 750 megawatts, totaling to 1.1 gigahertz. Now, what is interesting is, if you're looking at the valuation that has been ascribed, it appears to be quite an aggressive bid by Torrent Power. Enterprise value pegged at almost $1.2 billion, with the equity value of close to $450 million. So we have not independently verified these reports, and we reached out to the management we reached out to the Torrent Group. They are yet to respond to our queries.
Okay, all right. Thanks a lot for that, Vivek. Well, here's a quick recap of all the top stocks that we covered for you. Stocks with positive news flow include Tata Motors, NMDC, Coal India, MOIL, Religare, Torrent Power, as well as Escorts. While stocks with the negative news flow include Maruti, Eicher Motors, and MCX.
All right, I also just want to mention that Ashok Leyland's numbers, I think, just updated on the exchanges now, looking pretty good actually. It's a 45% growth that we're seeing in Leyland's numbers overall. And once again, medium and heavy commercial vehicles doing really well, 61% growth in December. And cumulatively, 2022 has been a great year for Leyland. It's a doubling of medium and heavy commercial vehicle sales. In December of 2021, they sold just about 41,000 and they ended December 2022 with 83,600 units. So it's been a good year for Ashok
commercial
Leyland.
vehicles more generally, whether you look at Eicher, you look at Tata Motors, or you look at Ashok Leyland. Okay, we have the promised understanding of the commodities ecosystem today. Manisha Gupta joins us. Manisha, crude ended higher on Friday.
It did, and again for a second straight year, Lata. Commodities have been volatile, but the best performing asset class in 2022. While we are entering the new year with recession concerns and COVID flare-ups and Russia sanctions as well, but we did see crude oil prices end 2022 with small gains, with markets anticipating crude prices to go back to the three-digit number of $100 and beyond. But that is by the second half of 2023. The first half promises to be volatile and slightly controlled there. But it is the metal prices which also have seen a negative closing in 2022. Markets do believe that the favorable domestic China policies could be supportive, especially in case of copper, aluminum, iron ore. These metals are what are on radar in sense of expectation on demand getting better, and the inventories which are at record lows to continue to support.
Okay, thanks a lot for that. So that is how the metal space is shaping up. First day of the new year and, of course, the start of the week. There was a slew of macro data announcements that came in on Friday. Core sector growth for November came in at 5.4%. Fiscal deficit ballooned to nearly 60% of the full year. Lata, the key numbers and what would the markets takeaway be?
Well, the markets takeaway first, like I told you, on core sector is going to be a bit negative, but that is November. Again, for November, the fiscal data, what for me surprised, it's not a big fall, but corporate taxes actually fell compared to year ago November. That is a bit rattling because one always thought that corporates are doing better. That would be a little worrying. We have to see whether the December advance tax numbers, will make up the difference. Likewise, the overall revenues as well fell compared to the previous year, that is April-November gross tax revenues. Okay, I think we are looking at the core sector numbers. Core sector numbers, like I told you, 6 out of the 8 sectors contracted in October. And that is a bit of a worry that November core sector contracted. But outstanding performance by coal and by cement. Coal up about 12.5% and cement up nearly 29%. Year on year, even month on month, they were good. But let me get back to the fiscal numbers if we can get that data up. The one point was that this, tax revenues, corporate tax revenues fell for the month of November. We are hoping it's a one-off. The positive is that fiscal deficit was higher. It is now 60% of the full year. And I would say that that's a positive because that means the government is spending, and that means that keeps the economy kind of kick-started. That's the fuel for the economy. And if you looked only at CapEx expenditure is 60% of full year. Last year, same time, it was only 46% of full year. So that means the government is not just spending, it's not revenue spending, it's as much CapEx spending. So that I would take away as positives from the fiscal numbers. Okay, that's as far as the fiscal numbers are concerned. One small worry on corporate taxes, but otherwise it's a stable set of numbers. Is all the stock news that we put on the table, and the most important among them were the auto sales. So we have perhaps the best known auto expert in India, Prakash Devan, joining us. Good morning, Prakash. Prakash is not just an auto expert, he's a good friend for the channel. Great 2023 to you, Prakash. Let's start with business. Tata Motors, it's a good number. It underperformed last year. What do you do with the stock now?
Good morning, Lata, and a great 2023 best wishes for that for all of you. So yeah, I think Tata Motors is clocked some very sentimentally very critical milestones, though they might not quantified in that way, in a very big way. But that 50,000 EV is a great achievement, especially when the others are still kind of not even crossing that 10,000 mark. So they've taken the lead and really built on it. So I think what's going to now happen is that their portfolio will start getting to cover many more price points, not just within the IC segment, but even the EV segment. They've already got 2 or 3 variants at very different price points, and that ability to be able to meet with customer expectations from all segments is going to be very important for scaling up EV, because it's a fairly high capex business, and you really can't do well if that doesn't happen. The other positive that I'm looking at potentially from Tata Motors is if JLR sales start picking up in China. China has been under this very constricted kind of a thing where there's no movement which was possible. So there's no question of people buying cars, right? But the moment that reopening starts triggering off some sort of a revival in car sales out there, which is imminent, which could take some time. I'm not saying it's happening today, but maybe the next quarter or so. JLR will probably get a breath of fresh air. into its game, and that's going to be a critical thing for Tata Motors, because all these years, last 2-3 years, we've been seeing numbers without the JLR contribution in a significant way, and Europe also has been struggling. So quite a few things that have turned around. And if you look at the consolidation on the stock, it's been beautiful. I mean, it's kind of weathered the storm of sorts, and it's held its own. And the CV portfolio is something which will also start contributing. So they just have these two legs and the international business. And if they were to fire on all these three cylinders, the two domestic ones and international, I think it could probably start testing those all-time highs in some time. And then the debt resolution, I mean, the debt repayment and all of that will start getting well timed. So yeah, good stuff coming from Tata Motors. But the entire auto pack, these numbers tell you that Maruti has been disappointing. Some of the likes of Eicher have been disappointing. But December is never a great month for auto sales, Lata. I mean, all of us know people keep on deferring their decisions. So I wouldn't read too much into the softness in this month's numbers, but look at what's likely to happen going forward. And there are some very strong indications that things could probably be positive as well. Yeah.
The other thing is that, medium and heavy commercial vehicle sales have come back in a big way, Prakash. You're seeing it not just with Tata Motors, with Ashok Leyland and Eicher as well. Now, for Ashok Leyland, the stock has had a good run from, sub 90 levels in, I think, April of last year. It's now back to 150. Do you see outsized returns here on because things are improving?
Good morning, Sonia. So, yeah, I think Ashok Leyland is just beginning to get into that turnaround path. I mean, it's done very well in terms of, strengthening its balance sheet in these years. So from an era where they could not invest more into newer models, newer price points, that has changed. They've started committing a lot of money. And what's also happened is that change of guard out there has been digested very well. So we don't put a value to these changes because they're very gradual and slow, right? I mean, it's taken almost like 18 months for that to happen. But Ashok Leyland's commercial sales pickup is not yet priced into that 140, 145 zone is my guess. The reason is my estimates are that commercial vehicles will do very well, especially minor, given the fillip in mining, the kind of tipper sales that you would have is significantly a portfolio that only Ashok Leyland caters to. In fact, Tata Motors actually is small on that. So Ashok Leyland will improve market share as well. So that's going to be a little bit of a trigger for the outsized returns. But I mean, don't expect fireworks. But yeah, I think it will outperform the sector, if not largely the broader markets.
All right. Hi, Prakash. Good morning. Wishing you a good 2023, Prakash. In the last few days, we're seeing some traction on metals, even on ground. That is in terms of pricing.
Yeah.
Those select pockets, there is still some weakness. But I guess that's par for the course and maybe a matter of time before it catches up. How would you approach this space, particularly since we're seeing traction on iron ore, on pellets? What's your take?
Yeah.
Godavari Power, NMDC, you normally track those two.
That's right. Thanks, Nigel, and you too have a great year ahead. I think the metal prices from Shanghai, I mean, I think December was $115 that we saw, which is almost like after 4 or 5 months that we've seen this price range come back. It's a very clear indication of what's going to come on the metal side. Absolutely. And my sense is not just the ferrous side, Nigel, because, that's something where we are pinning a lot of hopes for the China recovery and reopening. But remember, China also will end up producing a lot of metal, a lot of steel. And then that means that the end product could probably, so iron ore demand will of course go up, but the end product might not be as great, the situation in the end product, which means be a bit patient with, how things pan out for the likes of Tata Steel and the JSWs and the JSL. But what's going to be very critical this year, if you ask me, is going to be the non-ferrous, and that too, particularly copper. If copper were to really be looked at, because there's this huge deficit of sorts that we saw in the entire 2022, there are no new facilities coming up, no new assets coming on stream, which means it's only going to get larger. Now, if that were to happen, copper could actually, and it's bottomed out so beautifully, I mean, on the charts, on the demand side. But if the demand were to revive, whether it's a baiting of recession fears going away in the US or the China reopening or, the Asian giants looking at electricity generation, I think copper is got space to be. And very clearly, if you were to narrow yourself down within the Indian context, I think a bet like Hindalco with its aluminium also kind of driving the business makes a lot of sense. So I would stay away from the ferrous guys for some time while there's a very clear revival that's in the offing. But there could be some more time before that happens, and then that could test your patience. Whereas copper could probably take off from here on, and be with commodities is the game, is very clearly the mantra, but which commodities might make a lot of sense.
Okay, just want to wind up the conversation we had previously. What's a hierarchy in terms of auto picks? Which would be the best, and how would you go down the line?
So, we've not discussed M&M because, of course, we just had the Escorts Kubota farm equipment numbers. But M&M also has been, there's a lid on the M&M growth just because of the farm equipment being a bit slow, Lata. But if that were to change, they were to start seeing their EV portfolio grow from where it's a very small sliver of their market right now of their overall product portfolio. But if that were to start growing, deliveries start happening on some of the newer models, I think M&M is going to be the first out of the lot. And then I would look at a contra call on Maruti. As I said earlier, Maruti is actually consciously got out of those low price products, the A and B segment, to focus on the higher end. And that's what's reflecting in the numbers. But that's where it's more margin accretive also for them. So the moment the chip shortage eases out, which is easing out, they'll be able to do supplies, and the Grand Vitara numbers will start helping them in a big way. So Maruti would be my second pick, and then Ashok Leyland on the CV side. Tata Motors is a great buy, but it's for people who have slightly longer horizons. Right now, I think from a near-term perspective, these three will probably deliver much more for anybody who's entering afresh.
Okay, that's a great summary on those who have missed out on the numbers. Thanks a lot, Prakash. Just stay on. We'll come back to you. We're starting a brand new year, so we thought we'll put forth some new themes that you can invest into in 2023. Naveen Kulkarni, the CIO at Axis Securities, joins us now. He's written a very interesting note with his New Year picks of 2023. Naveen, good morning and Happy New Year to you. Since autos are the theme that we were just talking about, I noticed that you have Cholamandalam Investment, which is, one of your big stocks to watch in this coming year. And over there as well, I mean, the growth has been really strong for Chola, right? I mean, in Q2, it had almost a 70% disbursement. Do you think things can get better? And what's the trigger there?
Yeah, so in general, we are quite positive on the BFSI sector as a whole, right? So the thing about the whole sector is that how do you ladder up in terms of the overall risk profile? So in the overall scheme of things, we find Cholamandalam to be very well placed in terms of how they will be able to scale up their business, they already have a very, very strong liability franchise, but also be able to maintain their ROA and essentially be able to maintain the multiples, right? So that's the key for the BFSI sector from here on. In that, Chola fits quite well in terms of AUM growth, in terms of the return on asset, and of course, ability to maintain the valuation multiples. So those are the key factors for us for looking at Chola very, very keenly.
Okay, Naveen, good morning. A great new year 2023 for you and yours. Let me look at the kind of top picks that you have given us. Most of them are mid-cap picks. Are you broadly of the view that 2023 can see mid-caps outperforming large caps?
Yeah, so if we look at the overall construct of things right now, so if we, let's say, go back in 2017, typically we saw that small caps did very, very well, mid caps were okay, and large caps were underperforming. 2018, we saw large caps doing slightly better, but mid cap and small cap did not do so well. 2022 was somewhat a similar year compared to that of, let's say, 2018, right? Small caps have not done so well. Mid caps have been kind of okay, right? So 2023 is where I believe that mid caps are a sweet spot to be in. They are not too small, where the business models could be impacted by the macroeconomic headwinds, which will be there, right? There will be slowdown, there will be other challenges which will come. And they are not like very, very large where they are not able to maneuver the business model quickly, right? So from that perspective, mid caps are the sweet spot, and I believe that mid caps can deliver very, very good return in 2023.
Yeah, all right. Hi, Naveen. Good morning. The railway stocks did very, very well in the past year, particularly in the second half of the year. And from there, you have a pick, REITs, I believe. Give us the rationale out there and what's the outlook?
Yeah, so if you look at the theme for, let's say, rights as such, is that we are looking at railway capex to be a big theme for next year, right? So, and there are again a wide range of stocks which look very interesting. There are small caps also which are exposed to railway capex, which look very interesting. But rights as a company is a very stable company in terms of what they do, right? So they are essentially a consulting company. The order book is very strong. They will get a good number of orders next year. And more importantly, the return ratios, everything are like very strong. Lastly, the valuation is quite cheap, right? So from a perspective of the kind of ratios that they deliver, and of course the growth that we are going to witness, from that I think that it's very well placed to deliver a good 25-30% returns for the next 1 year.
Okay, the other theme that you like is this whole home improvement theme, right? And within that, Astral is a company. They're into drainage, water tanks, pipes, etc. Tell us a little bit about the upsides here and what could be the growth trigger for Astral?
Yeah, so if you look at, let's say, Astral, one of the key aspects for Astral will be what kind of margins that they will be able to deliver in 2023, right? So I think that the margins are likely to improve in 2023. That's going to be a very key factor for Astral. Second, of course, the overall product profile is also slowly changing. They are also entering new categories, and that's going to be, I think, a good long-term trigger for them to maintain their valuation multiples. As far as the growth is concerned, I think growth will be reasonably strong in 2023, but more important, the focus, I think we should be looking at how margin profile is going to improve in 2023, and the new product launches which are going to also happen will help in maintaining the growth rate and the valuation multiples. So from that aspect, I believe that Astral can deliver a return of around 15 to 20% in the next 1 year.
Okay. And you have interesting set of retailers, V-Mart, Trent. Would you add the others? I mean, the Shopper Stops, just all the retail, D-Marts. Would you add them? Why are these two special?
Yes, so in general, if I were to look at, let's say, discretionary consumption for 2023, I think can still be reasonably okay. What we look at from a retailer's aspect is their capital allocation policy, how tight the capital allocation policy is, right? So that's going to be a very critical factor, because what happens is that the margins can go haywire very quickly in retail business. So from that aspect, if I were to look at, let's say, a Trent or a V-Mart, I would say that these companies do not experiment too much with their business models in terms of getting into categories where they are not very confident about. So they are essentially companies which manage their capital allocation very well. So that means that the margin profile over the next 1 year can be expected to be fairly stable. And if we see the growth profile, we see that the growth profile is going to be more consistent, which will essentially mean that these companies can deliver still consistent and good returns over the next 1 year.
Okay, that's very helpful. Thanks a lot for your top ideas. Interesting bunch of large and mid caps and across themes, right? So Naveen, thanks a lot for taking the time out and speaking to CNBC TV18. Have a great 2020.
It's away from pre-opening rates coming in, but Anuj joins us in the studio as well. Morning, Anuj. Tell us how you're reading a trade setup. Likely to open up in the red, but what from there?
Morning, Nigel, Sonia and Lata, and Happy New Year to all of you. And of course to all our viewers. Before I talk about today's trade, just want to highlight that the importance of the month of January. You have earnings season starting next week, and then of course the pre-budget build-up. And normally, also this year is going to be big in terms of political cues, because you have 10 state elections this year almost, and some of them are really big ones. So it's going to be a big year, and January also gives you an indication of which way fund flows are headed. Though in India, of course, we have domestic flows which have taken center stage. Also, this India versus China is going to be a big theme. It sort of started in December. I think it's going to be the theme of 2023. Now, on Friday, I indicated that the market was a bit overstretched and could see some shorting. The main reason was the put-call ratio. It was at 1.41. Now it's cooled off to 0.88. And if you see the FI data, there also the long-short build-up has now come down to 50%. They've cut some longs and added some shorts. That's good news for the market. And if you start to see more shorting from FIs and you start to see longs reduced to, say, 35% or 40%, basically markets rally when you have shorts in system. In terms of Nifty positioning, my sense is that you open in a very strong support zone, 18,000 to 18,050. This is a zone in which if you buy, it's worked. And the recent low of 17,967 My sense is that's what traders would keep as a stop loss. And the profit booking zone would be somewhere around 18,225 to 250. On the Bank Nifty, it's a stronger index despite that big fall that you saw intraday on Friday. And, it's likely to give you a good risk reward. Friday low of 42,833 is an important level to watch out for on the downside today.
Oh, thank you very much, as always, for that very neat summary of the technical position of the markets. Anuj, and May 2020-23, see you take ours to greater and greater heights. I only request, don't forget your mica, CNBC-TV18.
Thank you so much, Lata, and thanks for your wishes, and of course, CNBC-TV18, always my first love. So, yeah.
Thanks a lot. Okay, I think you should get back to work over there. The team is waiting for you, and we have our technical experts joining us, Sudarshan Sukhani and Mitesh Thakkar. Good morning to both of you, and a fabulous 2023 to both of you. Sudarshan, may I start with you? How are the indexes positioned?
Good morning, Lata, and a very happy new year to you, your family, everyone. See, the indexes are not positioned well. They are in a choppy and sideways environment, and once the markets become choppy, essentially it means they are not exhibiting a trend. That becomes a difficult problem for traders. So for me, there is no clear trend in the market, neither up and nor down. It's really sideways. Sideways markets are difficult to trade. So my view for the day for the Nifty is I expect choppy market conditions up and down, and the Nifty is probably going to be an easier trade on the short side. But the Bank Nifty is the exact opposite. We can expect choppy market conditions in the Bank Nifty also, but I do not think the banks should be taken on the short side at all. If you find a dip, if you find some intraday movement on your charts, take a long side on the Bank Nifty. So both the indices are giving different messages.
Okay, that's interesting. Sudarshan, Mitesh, Happy New Year to both of you. Hope you have a year filled with great health. That's all I wish for people these days because nothing else really matters. Yes. Mitesh, good morning to you. What's the outlook on the index for the morning and slightly medium term as well?
Good morning, Sonia. Wishing you, the team of CNBC and the entire viewers a very, very happy new year. Thank you for your wishes as well. On the index, my overall view is slightly on the negative side, and I've been suggesting that rallies close to about 18,250 should be used to create positional shorts. But in the short term, I think there is clear-cut choppiness. The market direction is not very clear, and I think the indices are giving conflicting signal. Barring the Bank Nifty, which is where we would explore some long positions as well on the stock sides. But otherwise, on the Nifty, I think till 18,250 is clear, we can safely assume that the medium-term view remains on the negative side. And if we start breaking below 18,017,950 zone, then I think I'll start shorting as well, because then that will indicate at least a test of 17,800, which was the recent low, maybe a test of levels below that.
Okay. And with that, let's come over to the stocks. Sudarshan, what stocks today?
Well, it's mainly on the long side because individual stocks can still give us a better performance. Granules is my only short side stock. Granules has been in a bear market. Relative strength is poor. Momentum is going down. Intraday shorts are justified with a stop above 325. Tata Power is a buy. The stock had a nice V-shaped rally in the last 2-3 days, and the trend is now turning to up. Buy Tata Power with a stop under 205. REC Limited has been an outperformer. I think we have a lot of reasons why, so you will probably know much better. But it's making new highs for this period, even as the Nifty was languishing. That's a buying opportunity. It's a positional buy also if you want to carry it for a few days. Stop under 106. And CanBank is a buy. As I explained to you for the banks are not a shorting candidate. They are intraday buys only. CanBank could be an intraday as well as a swing trading buy. Stop under 321. And that applies to many other PSU banks. Look only to buy them.
Okay, all right. Sudarshan, thanks for that. Let's go across to Mitesh. Morning, Mitesh. Happy New Year to you. What are the picks you have for us today?
Morning, Najil. Wishing you a very happy new year as well. On the stock side, CanBank is something which I have in common with Sudarshan. That's a buy for me with a stop at 328 for a target of 345. And the other one on the buy side is National Aluminium. Here, I would recommend taking long positions with a stop below 79 for targets of around 85. I have two FMCG names on the sell side. The first one is Britannia, which I would recommend selling with a stop at 43.35 for targets of around 42.30 on the downside. And Marico as well is a sell side trade. Keep a stop at 515. Look for mild declines to about levels of 495.
All right, let's do one thing. Let's take a quick break. On the other side of the break, we'll have the pre-opening rates kicking in. We'll also have Krishna Nayasvi of HDFC Securities to discuss outlook